Welcome, everybody. Good morning. Let's jump into it. This is Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. I've got Brian Caprice from Keep Trading Simple. Real quickly, trading does involve risk and may not be appropriate for everyone. All trading decisions you make are solely your own responsibility. And lastly, this is educational in nature. So, sorry about that. Please, this is educational in nature. Please don't construe anything Brian or I say as a buy or sell recommendation. As I mentioned, it was quiet evening, not a lot going on. We've seen the oil market spike up. I think a lot of that has to do with the news around vaccines and people expecting the economy to fire back up and demand popping potentially, so driving price up. Brian, you want to give us a little bit of insight on some of the equities markets, maybe the Dow and the S&P, and what we're kind of seeing?
Sure. Yeah. So obviously, the overnight was not action packed. We didn't expect it to be. Again, using my go-to as far as gauge of how much movement there was, you can see that the last 24 hours, really nothing is even remotely close to its ATR minus the dollar CAD. And again, that's more of an oil story than anything else. Some of the biggest movers out on the market, things like the pound yen, you can see has moved 1 pip in 24 hours. So not the greatest amount of excitement. And again, waiting for Brexit there. The one bit of news that we did mention that we did have this morning, because yesterday we did mention that this morning was our last big opportunity for economic news releases, was this unemployment claims number. We mentioned it being higher and watching it high, go even higher. 778, when it's expected to be 732 is definitely a bigger difference. That could definitely drag on the markets today. Preliminary GDP came in as normal. Revised consumer sentiment will come in about an hour, and we'll see if the consumer is, again, if their first forecast was good. And then, again, the big bombshell could be this FOMC meeting notes at 2 o'clock today. So I figured we'd talk and kind of follow up with what we covered yesterday. Again, especially because that unemployment claims number is bad. The market hasn't reacted to it yet. We'll get that in about 30 minutes. But here's the Dow. Actually, I'm going to go one slide back further. Here we go. So the S&P, we mentioned this yesterday, having levels up here at 36.58. It was a level we saw on the hourly, and you can see late last night we ended up hitting that level. And I mentioned yesterday being high in the curve. Well, guess what? Here's your level, high in the curve, a rollover, and now we're sitting at a level of basing. So the S&P is one of those things where it is right now. Buyers have stepped in and stabilized it. We just got bad news about unemployment. Again, coronavirus vaccines are good, but again, having more people unemployed, hearing more rumblings every day about how the markets are going to continue to, lock down. Not necessarily the best thing, especially going into kind of Thanksgiving. So, that's kind of what I'm looking for, is kind of a pullback down. But I was looking at it over in the Dow. The Dow actually has a pretty interesting target that we've seen buyers step in. And again, remember, we're not trying to, use a crystal ball to figure out where price is going to go, but we're seeing the same stabilization. I'll drop it down to a lower chart, and you can see we're still kind of having the same issues, and it's kind of consolidating in right at this level. Now, on my charts right now, and again, you have to make sure you match yours, we're at approximately 29,986. If we are able to break through this, and again, when retail sellers get in here for this open, which again, with the unemployment data coming in this morning, I would not be surprised at all. I would say, again, there's a small, you can see this green box right here. That's why I kind of brought it up to a little bit of a higher time frame. But on an hourly basis, you can see that this level right here has worked as a kind of an area where buyers have been very quick to step in. We had this large rally up, we had a pullback. We burst out of that area, and then again, when price came back down, buyers stepped in and popped. Buyers stepped in and popped again. So, it's possible we could have I don't know, if we can get down to that level for FOMC, it is a potential area for us to take a bounce off of. We've seen buyers do it in the past, but from now till then, if we can drive down to that level, I think that provides us with a target to the downside, for lack of a better word. But again, FOMC can absolutely, without a doubt, move those markets.
And we are kind of hovering right around that psychological level that everyone was talking about, the big 30,000 in the Dow, and we seem to be just holding right there, and probably will until we see what happens when the cash market's open.
Yeah. Yep. Absolutely.
Let's do one more today, just because I think it's rather interesting. Let's take a look at gold.
Yep. Yeah. I wanted to, again, gold is another one of those ones. Yesterday we talked about, and again, I'll bring this back up to a daily chart, much larger. And we talked about how we can get a 4 hour. Gold was just absolutely collapsing, dropping through the floor, and everybody was, kind of saying, "Well, do we short it now? Do we short it now?" I thought gold was going to 50 or 50 million, right? And obviously we didn't go that far. I continued to push lower, and we mentioned again on a daily level. You can see that we had a level of basing, right? We had a nice rally up into it, a base, and then that was really the main launching point for gold last time, right? Right around the 1800 mark, and 1800 is a huge psychological level for gold. And we said if price was able to get in here, this could be the potential bottom in gold. Well, looking down on the 4 hour level, you guys can see that we came right around that 1800 mark. 1800 was right here. We tagged right off 1800, and not only did it stabilize, but it also provided a pop. On an hourly level, you can see, it's not a super explosive bit of movement. You can see that, again, if you're having a zone kind of in this level here, I'll change this so you guys can see it to a darker color. We'll go lime green. There we go. You can see that we had a level of basing and pulled away, came back and pushed up. So, is it the bottom? It could potentially be, right? But if you look to see what we have further on today, we have FOMC notes. This is obviously a technical bottom. We've seen people step in on the daily as well as the 4 hour. It's been a decent level. It stopped this very, very fast decline to the bottom. Unemployment numbers are bad, meaning, again, that stimulus word is a lot more likely, and we know what's going to happen when, again, we hear that stimulus word. Going into Thanksgiving, again, if FOMC, they have the power to mention stimulus that we needed, or we're going to keep rates low for an extra long period of time. Extra low rates also equals inflation, which tends to mean gold goes up. So It is a potential bottom area, I do think, and it's something that traders should watch out for. Whether or not it's going back up to 2000 today, I don't think that, but it is a potential area where I do think we could ever roll over back to the top side.
Yeah, well, let's take a look at gold over on Nadex charts, just for a little bit of analysis and what people could potentially do with gold. Here's that level that we're seeing that you mentioned, where buyers have stepped in. We've seen it going back around that 1800 level, plus it's a little bit of a psychological level. It did come down here. It seems to have found a base. It did bounce off it a little bit. There are some knockouts in here that could be potentially interesting. If someone wanted to try to play gold in a limited risk, limited reward way, potentially looking for it to retrace a little bit. You know what I am going to do? I thought it'd be kind of fun also just to draw some Fibonacci's on here. And if you haven't done this before, it's on the Nadex platform. We make it pretty easy for you. Take Fibonacci's. I'm going to, you know what? I'm going to start up here in the upper left-hand corner where we sort of saw it topping out. It is in a downtrend, so we draw it down to the bottom of the trend, and then we drag it over. All right, now that we've, it's a 1, 2, 3 type of a thing. And we'll see. I mean, we have seen this 1800 as its support. As it gets up to this 23.6 retracement level, it could potentially see some resistance here. If we are able to break through that, the next level, I mean, you can see it actually has, as gold went down, it hit these Fibonacci levels, and it tried to hold them as support. And when it broke through them, then it becomes resistance all the way down. It broke through this one. Again, it broke through it. It was resistance. So here we are, and if we're looking for a retracement, there might be some, you might see some certain levels where you could take advantage of that if you thought gold were going to retrace, rally back up. The other way to do this, let's just take a quick peek in our call spreads.
And I think I'm just going to chime in as you're getting that one. I think on the draw on that one, the 38.2 is the one for me that provides the most opportunity there for kind of a roll back down. If we maintain this kind of rally, this early morning rally back up again from that turn level, I think that 38.2 for the people that are fib people, I think that offers the best opportunity.
You know what? And here, just so people can see what you were talking about, I want to jump back to that. And for some reason, my internet connection is glitching. There we go.
2020, here. Stranger things have happened.
And of course, when I did that, so here I'm gonna draw that right back in, just so people can see it. Here we go. Upper left, lower, because we're in a downtrend. 1, 2, 3, over to the right. Hey. And
put the extension tool, not the retracement tool on.
Oh, that's exactly what I did. So let's delete that drawing. And let's just do, there we go. Hello, thank you.
Yep.
I'm having one of those mornings again. Here we go. It happens. And there's that 23.6 level that you're talking about.
The 38.2. I'm sorry.
Oh, and then the 38.2 right up above, which is right around that 1830 level. Right around that 1830
exactly. Yeah,
level.
you had basing, you had a drive up to it, a base, a pull down, another base, and then three large candles straight down. That tends to signify that there are buyers in there. That's it takes pressure to push it that fast or that far that quickly. And again, that's typically one of those telltale signs that, hey, listen, we should probably look at this for additional selling.
So right, and that's what we saw. So there we go. If we do, there might be a little bit of an upside play. If you wanted to take advantage of that with knockouts, I'm going to jump over to binary options. Jumping over to binary, we have weekly and we do have daily still. I'll just populate the chart, and you can take a look. There might be some interesting plays in here. I mean, here's where we are right now at a 50-50 roughly probability. You thought it might roll up, there might be an opportunity to trade.
Yeah, I think the big thing to watch out for is going to be FOMC today. I think the volume would be lower, but FOMC will definitely have the power to really move the markets. If they say something with anything coronavirus related or keeping interest rates low for an extended period of time, or even responses back to Janet Yellen being brought into the administration. So I think there's a potential for a lot of fireworks today.
Yeah. So we could pay attention to that. With that, I do want to thank everyone for joining us. I want to recognize what I'm thankful for. It is Thanksgiving and time to maybe do a little
pie. Lots of pie tomorrow. Lots of
the
pie,
pumpkin
a little
pie.
extra carbs here, and then a little bit of this way. It's backwards for me. A little bit of adult concoctions for the weekend. So
there you have it. So
I'll see you on Friday morning.
Yeah. So listen, everyone, have a very safe Thanksgiving. Let's all remember all the things that we've got to be thankful for. And a very happy Thanksgiving from Nadex, from Brian, and from myself. Very quickly, if you do want to reach out to Nadex, you can email us at customerservice@nadex.com. Or if you're looking to reach out to Brian, support@keeptradingsimple.com. And with that, again, please, everyone, stay safe. Have a wonderful Thanksgiving. We'll see you again Friday morning. Remember, tomorrow the markets are closed. Friday will be a shortened equities day, but Brian and I will be on to do a little analysis Friday morning. And with that, good luck in the markets, everyone.